Welcome back. The market is very volatile. This graph will not tell you, but just in the while we were in the break, there's a bit of a decline which has also happened. And today's expiry, so the market will keep throwing people out as well. There's the candle. I mean the chasers. The market will keep doing that. But the larger picture is that the dips are getting bought. And once again, it will begs asking the question: who really is buying like gay abandon over the last couple of days? And today also the dip has been really bought big time. The mid-cap index, of course, in the green. The Nifty, which was really building up a nice rally, by the way, has just seen another bit of knock. Anyway, we've got the first hour low now, which is sort of sacrosanct for both Nifty and Bank Nifty. Bank Nifty, of course, being the stronger index, but the Nifty as well is seeing a bit of a recovery. Let's move on then. Rites is a stock in focus. It's in joint venture has bagged new order for redevelopment of the Kollam Railway Station for 361 crores. The share for Rites in this order is 51%. Rahul Mithal, Chairman and Managing Director at Rites, is now joining us for a conversation. Mr. Mithal, good morning. Thanks a lot for joining us. What kind of, in these kind of orders, how much money do you end up making, and how's that spread over the next few quarters?
Good morning. You see, interestingly, this order is very interesting and unique for Rites because while we do about 20-25% of our revenue as turnkey, but this was the first order that we have got on the newly launched EPC mode by Indian Railways. So a few months back, Railways started the EPC mode of tendering, and Rites as a JV bid for this, and we have got this as our first EPC order. So we have 51%, so that means about 186 crores as the top line revenue. These are tight margin orders, but yes, they require very disciplined execution in a tight time frame to optimize the most of it.
You said these are tight margin orders. By tight, how much, and does that impact your overall margin picture?
No, you see, turnkey projects in any case, turnkey orders are in any case in the range of about 2 to 3% margins. And that is why Rites' total revenue is a mix of turnkey and consultancy. As I said at the outset, we aim for about 20-25% of our basket of revenue from turnkey. So by nature itself, turnkey orders have margins of about 2 to 3%. But as I said, because this is an EPC order, the execution is all the more important to at least maintain these margins.
For most of your orders, actually, your debtor days have improved. If you look at it in the past 3 years, in FY23, in FY20, you had over 113 days, which were your debtor days. And by FY22, it's come down to 96 days. Could this trend improve further, and will that result in, a better balance sheet for you?
Yes, definitely. This has been a very core focus area for us. We're also trying to get all the old debtors in order, and also the revenue, which was, say, for example, stuck in our export orders, that has all started flowing in. So I think that remaining constant focus area is definitely going to further improve.
Mr. Mithal, could you tell us what percentage of your, you operate in various segments, right? So you're very diversified. But what percentage of the work that you get on a nomination basis, as of now?
So that's the strength of Rites, and I would say compared to many other sister PSUs of ours, the trend of last few years show that we get at least about 65 to 70% plus orders on competitive bidding across sectors, and that is what gives us the strength. And this percentage is on an increasing trend as certain conventional clients have started more and more of competitive bidding. Rites has started getting more and more orders in the last few quarters itself. Last quarter itself, we got a number of orders on competitive bidding.
Out of this, so out of the 6,000 crore order book, what you're saying 60-65% is through competitive bidding?
Yes, that's the strength of Rites, and in fact, this.
So that's a big change, right? Because it's a big change. It used to
That's
be the opposite, I'm assuming, a few years ago.
Yes, that's a big change. The trend has been going upwards, and gradually, as I said, with every passing year, its percentage is increasing. In fact, with every passing quarter, this is further increasing. Last quarter itself, we got most of our orders in competitive bidding mode. As you see, this order also, the Kollam Railway Station redevelopment order, this was a very tightly fought tender, and we've got this order on competitive bidding in the open market.
Okay. In international consultancy, you plan to grow your focus over there. Can you tell us what are the kind of orders you're getting and any slowdown because of the, the recessionary fears?
See, international consultancy and Expotech, we saw an all-time high last year. It was about 1,000 crores plus. And out of that, international consultancy was about 100 crores plus. We have been aggressively bidding, as I've been saying, for a number of international consultancy projects. And in the Q1 itself, our international consultancy revenue has gone up by up to 45 crores as against the total revenue of 104 crores last year. So you can see the focus on international consultancy is a very important focus of ours. Recent orders, we've got consultancy orders of about 50 crores from Ghana Railways. We've got an order of about 25 crores from Guana Highways. So this is a continuous focus area to grow more international consultancy beside export of rolling stock.